Most traders waste time juggling dozens of indicators without a clear system, and that usually ends in frustration. But today, I'm going to share a simple yet powerful strategy that combines two underrated indicators, Generalized SSL and MACD. Used together, they deliver highly accurate trade entries and exits that you can apply across forex, crypto, indices, and stocks. In this tutorial, I'll show you exactly how to set them up, how to adjust the settings for better accuracy, and how to execute trades with clear rules. We'll then walk through multiple real chart examples so you can see exactly how it works. Stay with me until the end. This could be the breakthrough you've been waiting for. Step 1. Adding the first indicator, Generalized SSL. We'll start by setting up the very first indicator for this system, the Generalized SSL. This is what gives us our initial read on trend direction, and everything else will build from here. Here's how to add it. Open up TradingView and pull up any chart you want to use. It can be forex, crypto, stocks, or indices. The setup works the same way across all markets. At the top of the screen, click on Indicators. In the search bar, type Generalized SSL and select it when it pops up. Now let's optimize the settings so it fits better. Open the settings for the indicator. Under the Input tab, change LB from 10 to 14. This adjustment smooths things out a little and helps avoid overly noisy signals. Under the Style tab, clean things up by hiding or muting any visuals you don't really need. The goal is to keep your chart simple and easy to read. Leave the rest of the settings as default, then click OK to apply. Once the changes are applied, you'll see two moving average lines on your chart. Green line equals high MA line. Red line equals low MA line. Here's how we use it. When the two MA lines cross upward and price is holding above both lines, that's considered a buy setup. When the two MA lines cross downward and price is trading below both lines, that's considered a sell setup. Think of this as the first layer of the system. It doesn't tell us when to take a trade by itself, but it sets the directional bias. From here on, every step in the system is built around confirming that direction and making sure we only trade when conditions are stacked in our favor. Step 2. Adding the second indicator, MACD. Now that we've got our trend direction set with the Generalized SSL, the next step is to bring in a confirmation tool. For that, we'll use the MACD, Moving Average Convergence Divergence. This indicator helps confirm whether a momentum is actually backing up the trend we identified earlier, which keeps us from jumping into weak or fading moves. Here's how to set it up. Once again, click on Indicators at the top of your TradingView screen. Type MACD in the search box and add it to your chart. Now we'll make a few adjustments to fine-tune it. Open the Settings panel. Under the Input tab, update the values as follows. Fast length is 14 instead of 12, slow length is 28 instead of 26, and signal smoothing is 12 instead of 9. Under the Style tab, simplify the visuals, focus on the lines and histogram, and remove any extra clutter that doesn't really add value. Once done, click OK to apply. On your chart, you'll now see the familiar MACD setup. Blue line is MACD line, orange line is signal line. Here's how we read it. When the MACD line crosses above the signal line, that gives us bullish confirmation, suggesting momentum is shifting upward. When the MACD line crosses below the signal line, that's bearish confirmation, signaling momentum is turning downward. The key here is that the MACD isn't used to find trades on its own. It's used to confirm what the Generalized SSL is already telling us. If both agree, we've got a stronger setup. If they don't align, we stay patient and wait. Step 3. Defining trading rules. Now that both indicators are set up and optimized, it's time to put everything together into a clear trading plan. The goal is to have rules that are simple, repeatable, and leave no room for second guessing. Every trade will follow the same structure. Buy setup. For a buy trade, all of the following conditions must be met. Generalized SSL. The two MA lines must cross upward. Price action. Price must be holding above both MA lines to confirm strength. MACD confirmation.
The MACD line must cross above the signal line, showing momentum is on the upside. Final check. A bullish candle, green close, should form, confirming buyers are still in control. Entry. Place a buy order right at the close of the bullish candle once everything aligns. Stop loss. Position it just below the low MA line. This protects the trade while still giving it some breathing room. Take profit. Stick with a 1 to 1.5 risk-to-reward ratio. Sell setup. For a sell trade, the rules are simply mirrored. Generalized SSL. The two MA lines must cross downward. Price action. Price must be trading below both MA lines, showing the trend is weak. MACD confirmation. The MACD line must cross below the signal line, confirming bearish momentum. Final check. A bearish candle, red close, should form, showing sellers are in control. Entry. Enter a sell order at the close of that bearish candle. Stop loss. Place it just above the high MA line, which serves as dynamic resistance. Take profit. Again, stick with the 1 to 1.5 risk-to-reward ratio.
Step 4. Why this strategy works. This strategy is effective because it doesn't rely on just one factor. It stacks multiple layers of confirmation before you ever enter a trade. Each layer serves a specific purpose, and together they cut out a lot of noise that usually traps traders. Here's the breakdown. Trend direction, generalized SSL. This tells us which side of the market to focus on. We don't try to predict tops or bottoms, we just follow the direction that the market itself is showing us. Momentum confirmation, MACD. The SSL may show trend direction, but without momentum, the move can fizzle out. The MACD makes sure strength is backing the trend before we commit. Price action filter, candle confirmation. Finally, waiting for a bullish or bearish candle gives us proof right on the chart that buyers or sellers are in control at that moment. It's the last safeguard against false entries. By requiring all three conditions to line up, we filter out weak or half-formed signals and only trade when the odds are clearly in our favor. This keeps us from chasing random signals and forces us to stay patient until everything matches up. The system works across markets, whether it's crypto, forex, stocks, or indices, and across different timeframes. The structure doesn't change, only the pace of signals does. That's what makes it adaptable. But the most important part isn't the indicators, it's discipline. You need to stick to the rules without bending them. Respect your stop loss every single time. Keep your risk per trade consistent, and focus on the long-term process instead of obsessing over any single trade. That's what makes this system powerful. It's not complicated, but it's structured. And when followed consistently, it removes a lot of the guesswork that causes traders to lose.
So, to recap today's strategy, add generalized SSL to identify direction, add MACD to confirm momentum, enter trades only when both align with candle confirmation, stop loss just beyond SSL lines, use a 1 to 1.5 risk-to-reward ratio for consistent profits, practice on demo charts first, build confidence, and then take it live. If you found this tutorial helpful, share it with your trading community and subscribe for more step-by-step strategies. Stay disciplined, trade with the trend, and I'll see you in the next tutorial. Wishing you profitable trades ahead.